Hello traders, good morning, good evening, happy Wednesday. How are you today? Please give me some okay that you can hear me, you can see my screen. Wonderful, thank you very much. So how are you guys? Congratulations to France for winning and qualifying to final. As you know, they and Croatia, that's my bet for the title. So if Croatia beat England today, that means I anyway will win. So I'm with Croatia today for sure. Okay, so back to Forex market. We have several updates and some short-term changes that yesterday's news about the tariffs and all the Trump-China relationships. Thank you, John. So that the impact is immediate. It's mainly on the Pacific pairs and the yens, as you logically to expect. Anything related to China would go directly to Australia. They are immediately affected by any changes in the Chinese economy. And today we have the cat pair, which also starts to show some kind of new movement due to the fact that they increased the cash rate once again. So at the beginning of the week, we knew that this is going to be a fundamental week, and it is a fundamental week. Some volatility comes in with the news. For us, volatility is most important, but we also need to fit in the setup. So first, let's go with the updates, validations and invalidations of some of the levels that we have. First of all, pound versus the Aussie, which yesterday created this lower lows idea. So the plan was look for the sells. We need two waves retrace or bearish hidden divergence and look for sells. So now the pair does form a bearish hidden divergence. And in order to be able to trade in the divergence, we need to make sure that we don't have anything against us on the higher time frame. We currently don't. And the lower time frames is with us, which is currently correct. So the bearish hidden divergence that pound Aussie starts to show definitely starts to be interesting, as long as it remains inside the zone of the range. But there is one concern with that. The 1 hour chart rally is, well, very, very steep, right? And the angle of the trend line also. So what concerns here is mainly the fact that the retrace of the previous wave went all the way through 61.8 and holds above it. That's not a good sign normally, and that means simply we have to be careful here. What does it mean to be careful? Does it change any of the long-term plans? The answer is no, but we do need to be more cautious here and apply the principle of double confirmation. What double confirmation means? After we got the breakout, assuming that we get it, right? We are looking for another pullback and another breakout, or after the breakout, bearish hidden divergence to be created, and then for sells. Why it's so important to apply double confirmation in such case? Well, let me just make sure I'm recording. Oh yeah, it is. Why the double confirmation is so important in such cases? Due to the return. When the return happens in one leg, fast, straight, crossing through all the Fibonacci retraces, that's a suspicious sign. Okay, and that's where we have to be more careful, and that means apply the double confirmation. So let the trend line be broken. If it does, wait for the second confirmation, which could be any of the pullbacks, including hidden divergence, because we assume we have a trend in that case. And the invalidation here would be simply if we get out of the range, and then we are probably going for the duplication of these legs before the longer term sells. So the bottom line is long-term plan does not change. The short-term plan does change, as we wanted to see a normal pullback in two waves and be able to trade the breakout. And the two waves did happen, but they are extended, went through all the Fibonacci retraces, and this is a suspicious sign. And add to that the fact that the trend line was not broken yet, no momentum was gained yet. 1 + 1 normally equals 2, as I always say. This is a warning sign. Okay, this is the pound versus the Aussie. Euro Aussie, same story. We were waiting for the break below this low to validate the turnaround with the convergence. Never managed to happen. And now the Euro Aussie turns it upward. So does that change any of our long-term plan? No, because according to the long-term plan, the invalidation for this cycle, oh sorry, this is the triple. The invalidation for the triple cycle was and still remains the last weekly top. It does, however, change the timing and the possibilities to trade on the short term. And that means we have, with the Euro Aussie, currently, there are simply no sells. The whole idea was, once again, get the lows, confirm the reversal, pull back, and sells. The pullback is again in one straight leg, going through all the Fibonacci retraces. That's not the conditions we want to deal with. That's not the conditions we want to fight. That's not the conditions we want to go against, right? Or go with. And Euro Aussie, long-term plan was and remains looking for the sell setups. Short-term does not provide any signs for possible sells. That means the short-term rallies could still continue. We are after sells. There is nothing to do with that at this moment, and that's a fact. That's the bottom line. That brings me to the next Aussies, which Aussie Kiwi and Aussie Franc also interesting here. Aussie Kiwi, we are after buys. We need two waves pullback with bullish divergence for buys. So currently we don't have anything here. So if we manage to create that leg, we are looking for these buy setups. Aussie versus the Franc, same idea. We were after the buys. We are bullish as long as this invalidation holds, but the bullish means corrective cycle, two waves and breakout, range and breakout, or bullish hidden divergence, right? Which is currently developing. For bullish hidden divergence to be relevant, we need the higher time frame to be with bullish divergence as well, which it is not currently, and a daily not to be against, which it is currently bearish hidden, which makes it very simple. The 4-hour chart bullish hidden divergence on the Aussie Franc currently not tradable, not usable. How can we still use that? If it becomes the corrective cycle. Corrective cycle could be in two ways only, two waves or a range. Okay. Once we get that, we have the okay to go and long. And that's about the Aussies. Any questions? Of course, Aussie dollar by itself, also, like basically like the Aussie franc, remains relevant for us as long as we are above the invalidation. The plan is exactly the same. We require two waves with bullish divergence to be confirmed. As for now, we don't have signs against us on a daily chart, but we also don't have real signs with us on the 1 hour chart. Why not? Because we don't have on this move down and on this divergence, we don't have any two candles in play, which means this is one move. Okay, so the only way to plot here two waves is this, the big wave with this big divergence, and that makes this trend line to be the breakout. If we manage to break above that, we can start talking about the buys again. As for now, we're pretty far away from it. Okay, so the Aussie dollar is for buys currently. Again, we're waiting for the setup. We wanted to see the pullbacks. They happen, waiting for the setup. Invalidation would be if we go once again straight below all the Fibo retraces. If that happens, game over. Bearish power is back in the game. As long as it didn't happen, the buys remain relevant. Yet, oh, possible head and shoulders. Possible head and shoulders. Where? Not sure I can see here any. Or you mean this one developing, or this one? The little one, number one, or the big one? Not sure I see that. Okay, the big one. Yes, but head and shoulders normally tends to come after, at the end of a trend. We don't really have a trend yet to call that reversal pattern. Wouldn't rely on it too much, to be honest. Okay, next one. Where's my list? All right, euro dollar and a pound dollar. So they are currently developing what we want to see from them. The second leg down, where from we would be looking for the buys. Remember, this was and remains our plan. They both start to do that. This is now look like the second leg of the pound, which we'll be looking after that to stop and a buy. So let that go, let that happen. It's all correct, all good. Dollar yen approaching slowly towards the 112 we discussed and wanted to see. It's getting very close to that. Meanwhile, remains bullish on the short term. CAD yen, which yesterday got some traders excited with this little move down, proves today that longer cycles are stronger than any of the 1 hour chart. Always remember what I always tell you guys: trade facts, not wishes. Yes, everyone can wish to have a crash and enjoy a sale or whatever it is. Trade facts. The fact is there is no false break and convergence yet. Not daily, not 4 hour. Therefore, the 1 hour is nothing but a pullback. So yes, the 1 hour chart make the break of the low, created some kind of convergence idea here. But ask yourself this question: do we really have two classical false breaks there? Not really. Do we have two waves, retrace and breakout? No. Here we go. That's where the 1 hour chart is irrelevant. As simple as that. Irrelevant. As long as the 4 hour and daily do not fit. And for us, the plan was and remains short-term buys. It is still correct everywhere. Kiwi yen, Aussie yen, CAD yen, pound yen, and also the euro yen, which yesterday created for the first time one false break, never made a second, so we are now in a possible top. If we continue straight from here, which is very likely to happen, remember our most critical level is the 132, 133, which fits in these cycles right here. That's the critical zone. So we do want to see the trailing closer and from their most likely big sells. What will bring the sells here is if we manage to create a second false break and turn that for lower lows, then we're after sell rallies. So keep attention on that, guys. The levels are there. First false break is there. It's also very well seen on the 4-hour chart. It's there. It's happening. Okay, so once it's completed, we can start looking to trade it. Before that, it still belongs only to the wish list, not the trading list, the wish list. All right, next one. All this discussed. Well, cat pairs, but cat pair is not really relevant right now after the news. We need to see how it's stabilizing itself. Currently, nothing there to be done. This is the next interesting one, gold and silver. Remember, this is our invalidation area. So what we want to see in that case, yeah, it's a bullish hidden divergence after the convergence. We had the convergence here. Now it's forming a bullish hidden divergence. In order for a bullish hidden divergence to be valid, we need to make sure that higher time frame is not against us. We are good here. And the lower time frame is with us. We are not good here yet. It does develop the divergence, the potential divergence. We never got a false break and higher highs yet. We never got a false break and trendline breakout yet. If we manage to get it, that's a good possibility for short-term aggressive sell. If it simply goes lower, that's basically our invalidation. Break below that opens the door for the short-term bearish move towards 1220, the next cycle level. Okay, so that's for the gold. Oil starts to be interesting by making the second leg. This was the first. This is developing the second. This is where we would like to see our divergence and our buys place. The levels to watch for oils would be around 70 would be classical zone, and if not there, then 68. Okay, so that's the oil one. Kiwi dollar, basically the same. As long as we are above the invalidation, we are after the buys. Same story, bullish hidden divergence forming. We need to make sure that higher time frames is free to go. Higher time frames, we don't have any signs against us, and lower time frames has to complete a divergence, which it didn't yet. It's only potential. The divergence is potential between these lows, which means this is the last relevant trend line. If it managed to turn around, that's the big trend line to be broken, to look for the buys. Okay, so that's another one. And covered. Yep, that's my list for updates. Indices. The DAX broke this trend line it had. This is the 1-hour chart though, but the trend line is this one, with the daily bearish hidden divergence forming, we are after sell. The ideal scenario would be, should be like this. So some divergence on the 4-hour chart as well, and then 4-hour chart breakout for sell. Ideal scenario. But if the top will manage to hold, any sell rallies would be also valid. Basically, the whole sensitivity currently happening on indices is due to, of course, Trump and his tariffs. So they start to be interesting. Nasdaq will still require the break of the trend line. Still didn't happen, so too early to discuss about. Cryptos, we don't have any changes, so that's basically all my list. If you have anything on your list that you would like me to cover, guys, please go ahead. So the most important thing here is to remember the OZ and the other Pacifics, right? They got the most affected. The long-term plans does not change. The short-term does change the way the setups look. We couldn't find any setups after valid 2 waves. That means patience for the next setup. If we don't find it, we don't trade it. Very simple. The chart must be clean, perfectly clean to go. Okay. Dollars are, it's not on our trading list. I can do it private, of course, on Telegram. That's not for the trading list. But a little tip: if you are looking to deal with such exotic pairs, be sure you're on the sell directions instead of buys. The swap can kill the whole position if you're going with the buy. So unless you have swap free account. So. Okay. All right, guys. So that's all. The main hot list was and remain around the cat pairs. Well, Aussie pairs now start to be not really interesting because they don't have 2 valid waves. So we are waiting for good setups there. So cat pairs and the yen pairs. That's the main interesting ones. And the majors, euro dollar, pound dollar, starts to be also making the second leg. Definitely worth to watch. I'll see you in Telegram groups. Thank you very much for being here, guys. I wish you a wonderful day, and bye for now.